So why isn't your win rate as high as you want it to be? Now, a huge factor in this, and you actually may not even realize where you're going wrong with this, but it is the conditions. Now, the reason you probably don't know where you're going wrong is because on an intraday level, you are taking the exact same trade, right? On an intraday level, all your trades look exactly the same. But it's when you zoom out and actually look at the higher time frame conditions where you really notice the differences. And to actually spot this, you have to be very self-aware. Now, the only way to gain the self-awareness is through journaling. I'm not even going to bother boring you and talking about that. I'm just going to leave a link to a journaling guide in the description, and then we're going to get into the actual technical analysis side of things. So when it comes to your trades, right, there are going to be two main categories that they fall under when it comes to conditions. So the first category is going to be the trades that have a super clear higher time frame context, right? And this isn't where the issue actually is, right? This is not an issue. This is where you will be getting the most high probability trades, and this is where a high win rate is actually promoted, right? This is the category that you want the majority of your trades to fall under. Now, before we get into the other category, I will just give a couple of examples of this. So for example, on Euro USD, if we look at this leg here on the daily, right, you can see that price had a clear buy side liquidity target to go and reach for. Okay, you can see that price is not in a consolidation. We're not moving sideways. We're getting solid bullish closures, right? There's no failure to close above these highs and a rejection away. You can see that we're respecting the bullish PD arrays, right? Every time price is retracing, we come back to internal range liquidity. We respect those inefficiencies, right? We don't close through them and then we move away. If we move on to the 4 hour as well, you can see that every time price comes beneath an old low, right, that is simply just a liquidity sweep to then sponsor the move to the upside, right? We're not getting those changing states. When price takes out a low, it's simply liquidity to sponsor the move higher. Now, this is what we want to see when we have clear higher time frame conditions. There's no question here about the direction of price. And even if you want to use intermarket analysis, we can go on the dollar index, and this exact same leg in price on the dollar index has the exact same conditions, right? We still have a clear higher time frame target, right? We have solid bearish closures. All the bearish inefficiencies are being respected, right? Price isn't disrespecting any of the bearish FEGs, okay? And then if we go on to the 4 hour, again, anytime price comes and moves above an old high, it's simply just liquidity to sponsor the move lower. Like we take out this high here, we take out this high here, and it's just liquidity to sponsor the move, right? There's never any question about the direction because we're just following order flow all the way to the target. So these are the types of conditions that you want to be trading within, right? This is what actually promotes a high win rate. Now, the issue arises with category number 2. Okay, now a lot of your trades that actually end up losing probably fall into this category and you don't even realize it. Okay, so category number 2 are trades where you still have that intraday model that you're looking for, but the higher time frame conditions are not there, right? The higher time frame conditions are not clear, and instead of leaving the trade alone because of that, you go and you use these technical analysis skills that you've built up over time, and you use it to try and convince yourself of a direction. Okay, so let me go and give an example on Euro USD. If I turn off replay mode, we can look at the most recent level of price action, right? Because the recent price action hasn't been the greatest. So what does it look like to have unclear higher time frame conditions? Well, for starters, the day of this recording is the last day of the month, okay? And price has already taken out this high here, which is previous month's high. So we've taken out previous month's high. It's the last day of the month. So we've reached the liquidity target and it's the end of the month, right? Not only this, but if I was to go onto the 4 hour, you can see that price is building up liquidity on both sides of the markets, right? You can see we have relative equal highs here, and you can see that we have relative equal lows here. So price is building liquidity on both sides of the markets after taking this out. And when we go on to the daily, remember I was talking about these solid bullish closures that price was giving, right? We close above a swing high and we don't return, right? We keep pushing. You can see here on the daily that price has just been failing to get any sort of closure above this high and even, these previous days high, right? We're pushing to the upside and just rejecting away, right? you can clearly see these bodies are stuck in a range. So when it comes to conditions like this, right, it's clear or it's unclear what direction price is actually going to go in. And even if we look at the dollar index, right, using that intermarket analysis, you can see that price is super choppy on here as well. And then within these unclear higher time frame conditions, what you'll do instead of sitting on your hands is you'll have a look at price and see, okay, yeah, we are still creeping up to the upside. Price is moving slowly, but we are still moving to the upside. And you'll use that to justify the fact that you can still trade, right? So let's rewind it and say that we're here, right, before New York session actually played out. You would use this bullish price action, right, even though we're stuck between these two range highs and lows. You would use that and justify the fact that we're moving to the upside, right? So you would say, okay, we're forming this bullish order block, right? Price has respected this bullish order block here, and we have this FVG that price has retraced into, right? So you'd use that and you'd say, okay, cool. So price on the 1 hour is bullish. We have these equal highs to target, right? And potentially you would actually execute a trade within these conditions. Now, another example of this is here on gold, right? You can clearly see that price is building equal highs on both sides of the market, equal highs and equal lows. Okay, so on the daily, there is no real clear direction. However, if we go on to the 1 hour, there are multiple instances within this range where price starts to build bullish order flow. Now, this bullish leg here, that one isn't too bad, right? Because before all of this price action here, right, imagine it was cut off here, you wouldn't know that price is in a consolidation. But then once we fail to make this high here and we come back, price is clearly stuck in a range. So whilst price is in this consolidation, potentially you would go and look at this leg here and see price building this bullish order flow. And you would tell yourself, okay, well, the 1 hour is bullish. Why can't I go and actually engage in price, right? You can see that we have this IFVG here, right? You could go here or you could use the whole thing. So you can see that we have these 1 hour bullish arrays being respected, but price is still trapped in a range. And if you go and you actually execute within these conditions, right, whilst you're stuck in the range, you're actually trading in very low probability areas. Even though you probably are executing the exact same intraday model, right? Let's say, for instance, that you wait for price to build up liquidity. Let's say wait for Asia range, right? Let's call that Asia A, and you wait for London session to sweep that and then move to the upside, right? We'll call that L, right? So let's say that you're waiting for that essentially to happen, right? To catch this move here. From a close-up perspective, all of your trades will look like this, right? Every single one of your trades on an intraday level will look like this. However, if you actually zoom out and you go and look at the conditions, right, you'll be either trading within those perfect higher time frame conditions that I presented at the start of the video, and that's good. That is going to promote you having a high win rate. Or if you zoom out, you'll realize that a lot of them are also taken within these poor higher time frame conditions where maybe we do have a bit of bullish order flow on the 1 hour or the 4 hour, but there actually is no higher time frame direction for price because we're either trapped in a range or there's simply no targets, right? And price is just moving super choppy. So the key is to actually go through your trades and identify where you're trading within good conditions and where you're trading within bad conditions, right? And then you simply need to eradicate all of your executions that take place in bad conditions. Instead, what you need to do is you need to identify when price is in bad conditions and you need to sit on your hands. Okay, you just want to not trade until price is obviously going in one direction. Okay, the moment that you're on the charts and you're doing loads of analysis trying to convince yourself of a direction, but you're still not 100% sure, you know for a fact, right, that you shouldn't be trading in those conditions. So that's where you just stop trading, sit on your hands, and wait until the market convinces you. Don't try and convince yourself. Wait for the market to convince you. Now, I personally double traders' win rates by teaching them everything I know about higher time frame conditions, daily bias, intraday, power of free formations, intermarket analysis within my mentorship. Now, if we've built up enough trust, I'm going to leave a link in the description for you to go and check that out. Hope you found value in this video, and I'll catch you on the next one.